Okay, let's go ahead and work on processing payroll for March. Again, something that we've done before, but again, practice makes it perfect. I just want to show you again a couple of things here that, um, again, even though you're not going to see me entering time cards anymore, unless you really ask for it, then I'll be happy to film something if there's some specific aspect of it that you don't see. But um, meanwhile, here it is, right? So this is our right. That's the time. We have basically uploaded it again because the time card entry itself does not impact debits and credits. We don't want to spend time each month on this simulation discussing it. However, we do upload it and we wanted to start with it to show you that that's how it kind of transpires. That's how it converts from this time card and then it travels all the way through to payroll and customer billing, as we've showed you. So anyway, we have these time cards in, and again, you can have these time cards and practice with them. We will make this available via Amazon as we always do, so you will have these timesheets available to you. If you want to practice booking timesheets, this will be for you. Anyway, let's get to payroll. Let's get to paying employees. Okay, so this one, period end 28, correct. Check date 3/5/2021. Okay, here's our three employees. All right. Oh, yeah. Blind me. Okay. Here we are. Okay. Something that we're familiar with from previous simulations, from previous episodes of this simulation. However, practice makes it perfect. So let's keep going with it. And plus, we'll be adding more employees. So we'll make it even more complex and interesting, right? Um, let's get to it. We've done it before. Again, we need, because I'm doing payroll manually, I turned off the automatic payroll and turned on manual payroll in QuickBooks. It's doable. Technically, you can run payroll in Excel. That's how we prepared this one. And then you just post it all into QuickBooks. And you could do that, and we'll show it on one of the simulations where you do have external payroll. In this instance, um, we're kind of doing hybrid, right? We don't want to be into it for services that are so easy to do in the back of your hand that we'll just, post it here. Anyway, let's keep going. So let's start with Chisomo, something that you're very familiar with. Here it is. This is the earnings. Um, let's enter the employer taxes. Here they are. Social Security, Medicare. Right, here it is. And this is Chisomo's individual. Okay. Federal, these are withholdings. Net pay 2,675 and 24 matches. That's what we're going for, right? That's the key right here. Debits and credits. Do we know debits and credits? Of course we do. We always do it. So there's several things being impacted from previous. Again, let's show it. One, we're impacting our payroll expense. And again, we didn't, I mentioned starting second quarter of 2021, we will break out payroll expense and payroll taxes. So payroll wage expense and payroll tax expense. Right now, the way QuickBooks have it kind of cookie cutter set up is payroll expense in general. So we'll just use that for now. Serves the purpose. Again, a lot of these softwares, they were designed by programmers, all right? And we just have to live along with that because they did the best job they could. Payroll expense will go up. What else is going to go up or down? Our payroll expense up. Our payroll bank account will go down because there'll be check that will be cleared for Chisholm, a check amount right here. What else? We'll owe some money to the government, and that would be our payroll liability. 4,000. Because we'll take money out of the employee paycheck right here, and we'll incur some payroll taxes that we will have to pay to the government, right? But until we do, it will be liability. So let's do it one at a time. Payroll expense is going up. What is in that payroll expense? Well, first of all, it's the gross wages. 3760. What else? It's the employer taxes, right? So it's your, well, let's see if we can do even more granular detail. 2, 3, 3, 12, 54, 52. Here it is, right? These two amounts right here, they're debits to account 66,000. And this amount right here is also a debit to account 66,000. 66,000 is a payroll expense account. Expenses go up when debited. What else is happening? Well, once this check clears and once we process this payroll, it will impact that bank account. Once we reconcile it, we'll clear it, but meanwhile, it will impact it in the books. So it's going to be 267524, right? Here it is. Something is missing. What is missing? That's the amount of money we owe, right? And it has two parts to it. It has what we have to pay as employer taxes and what we withheld from the employee as employee payroll taxes. So a combination of those two. So let's go ahead and do that. So it's 23312 plus 5452 plus 564 plus 2312 plus 54 2 plus 188 plus 45. Ta-da! We're in balance. Debits and credits equal each other. They have to, otherwise we wouldn't be able to book it. Right? Here it is. Let me do it one more time. This amount right here is a debit to 66,000. These two amounts are debits to 66,000. So those three items just drove our payroll expense, right? In the future, we'll probably segregate these and these. This will be wages, salaries, and this will be payroll taxes because for tax purposes, when we file tax returns, we actually segregate those two. Expenses go up when debited, makes sense. We incurred some expenses. What else is happening? Well, our bank account will be impacted by the check we wrote to Chisholm, right? This check 1012. And once it clears, it will reduce our bank account by $2,675.24. It's right here. That amount is right here. And bank account is in assets, and assets are reduced when credited. What else is happening? We have to pay some money to the government, right? And that's the combination sum of these two items and these 1, 2, 3, 4, 5 items right here. Because we withheld some money and we owed some money to begin with. So we have to pay to the government. Right now it increased our liabilities. Liabilities go up when credited. Therefore this amount is a credit. Right? Makes sense. Perfect sense. So let's continue. Next we have label hang. Alright, with these ones, again, as I've mentioned, now this one I did correct, all good, so let's just go ahead and post those. Alright, our net check valid, alright. Let's scroll to our statement for label hang. Ta-da! There it is. Again, let's just depict of what's similarly to the previous one. Alright. Then just this one. Debits and credits are in balance, just like we expected. And by now you know that this amount right here is a debit to 66,000. These amounts here are debits to 66,000. This amount, oops, sorry. This amount, my bad. This amount right here is a debit to 66,000. These two amounts are debits to 66,000. This 4,780 and 77 cents is a credit to account 10,200, and then we owe 3,500 in payroll taxes that we gotta pay. Right, so that increases our payroll liability 24,000. Same next. All right, one more, and that's for Reyes. Okay. See, again, we need to adjust the payroll gross wages a little bit by 1 penny because, again, like I mentioned, QuickBooks does some of those um, prorates adjustment for whatever reason it does that. But we do need to bring our gross to the total we have here to be consistent. If we do run it in QuickBooks, we may not want to do that. However, there could be conversation between owners saying, why is your payroll a couple of pennies above mine or below mine? I thought we agreed to equal salary. You could say, yeah, it's a rounding error on prorating. I don't know why QuickBooks does it, but it does it. Anyway, let's keep going. Our net matches. All right, so debits and credits are in place. Let's revisit it. So this one, well, actually, this is not correct, so it should be one, right? Um, so let's keep it that way. Technically, these are actually identical. These are identical to our previous one because the two others basically have the same compensation and they chose same taxation structure. So their paychecks are very much identical. We have the debits and credits depicted. Let's just revisit it again. This amount and these two amounts are debits to 66,000. This amount right here, 4,780 and 77 cents. That's a credit to 10,200. That's our payroll bank account. It's reduced by that amount. And then some of these and these, even though these have negative numbers, sign disregarded. Just the pure sum of these, and you can see it. Basically, that's how we derive to this amount. Those increase our liability. Liabilities go up when credited. All right, so save and close. Right, this is our summary. Again, let's just, based on this, let's see what do we have. So we have the gross pay right here, the debit. Then we have employer taxes right here. We can just reduce it to one. Our net pay will impact our bank account right here once we print it. And amount of money we owe. Let's break that part out. So there's two parts. One, the money we took out from the employee. And two, the employer taxes, right? And again, oh, oops, because we, of course, this one has to be reduced by 1 penny because of the rounding and issues with this one. Made that adjustment. So anyway, debits and credits are in balance. That's what's important. Again, this amount minus 1 penny is a debit to 66,000 plus this amount is a debit to 66,000. So this and this combined is our payroll expense. Then employer taxes and employee taxes haven't been paid to the government yet, so that's our liability. Payroll liabilities go up. So 24,000 is a payroll liability account. Liabilities go up when credited. And then the net pay is what's going to clear our payroll account. That's a credit to payroll account because payroll account is an asset and assets are reduced when credited. So let's create those paychecks. Right, print paychecks. Here they are. First check. Check is 10. Again, we might have to reorder it. That's fine. Checks printed well. The only thing is, again, the order of the checks. We've had issue with that in the past. We're still having that issue to match to our payroll report. So we can just go ahead and make those corrections. And I've showed you before how we do. Sorry, very different way. No. So our payroll date is 3/5. Okay, and here it is. So this one is for Chisomo, and Chisomo was 12. All right, then we have this. One last more we have Lebahan. That's weird. And that's our 10. Alright, we corrected, and you can see all the debits and credits behind the payroll that we just did, right, for that day. And you see all those expenses, payroll expense accounts, payroll bank account. You know, the transaction detail report is a very good way to inspect debits and credits. Alright, so we're done with this payroll. However, we run payroll every 2 weeks. So we have one more payroll in the month of March that we have to process. But before we do that, let's fund the previous payroll. So that one is done through transfer. General to payroll account. Debits and credits. Always have to know debits and credits. We have two assets here. And again, one asset goes down, therefore it has to be credited. And the other asset goes up, therefore it has to be debited. So this amount right here, it is a debit to account 10,200 and it is a credit to account 10,001. All right. Before we do our next payroll, got to pay those taxes. Remember, we have the payroll liability, right? 24,000 account. As far as payroll taxes, we need to pay those as soon as we can, right? As soon as we're done with those, we're gonna pay them. So let's go ahead and pay them. Again, as far as the dates, it all comes down to the payroll date. That's why I always choose that. Okay, here's my payroll liabilities. Here's my California. All right, $1,802.36. Yep, there it is. What goes up, what goes down? All right, what's debited, what's credited? Well, this money will be coming out of our payroll bank account. Bank account is an asset. Therefore, when it is reduced, it has to be credited. What else is happening? Well, we had some money that we owed to the government, in this case to our state tax authorities. That is being reduced. Once we pay them, we no longer owe it. So our payroll liability is reduced. Payroll liability, as the name states, is a liability. Liabilities are reduced when debited. So asset is reduced because we're using it to pay liability, and liability is reduced because we're paying it down. All right. Let's see. Let's just check the date here. And the way QuickBooks does it, if you are not using their assistant payroll, they don't want to make it super easy for you, so they force you to use the check form. That's fine. I mean, no matter what the interface says, we don't have to put check number. We can use any other reference number. Again, programmers are programmers, accountants are accountants. Yeah, they can develop a perfect program for us, but that's fine. We know how to use what they gave us. And again, this is our bank account. Right? Makes sense. It's right here. All right, let's create a check. Here it is. We use last four digits right here, and then we'll use the letter S to indicate that it's stayed. Here it is. This amount right here. This amount is a credit to account 10,200, right? And then, well, we can just break it into two, make it even easier for you. Debits and credits are in balance. This is a debit to account 24,000. This is a debit to account 24,000. Right? That's it. That's all we need to know. They're not shown here because that's the way QuickBooks designed this interface. But we know what's going on behind it. So regardless of what interface shows, we have to know debits and credits behind it. Okay, save and close, right? Yep, good to go. Yeah, change that. Okay, then we have federal taxes we gotta pay. Again, I keep it to the date. So federal taxes we gotta pay 6,517.04 cents. Yep, right here. So again, make sure the date is correct. Payroll account. Yes, 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 yes. Some people say, why didn't you pick the whole payroll period that was paid? For payroll taxes, it doesn't matter. The only thing that matters for payroll taxes is the day you pay. That's what starts the clock, that triggers everything. Prior to that, depends on the labor laws. You could have a whole year worth of payroll that you didn't pay, but then you paid on that one day. That's when it triggers your payroll tax. That's why it's the only date that matters. That's why I have that here instead of something else. Because what if it picks up something else? Those transactions are not relevant. Anyway, here we are. What's the debits and credits behind it? All right, and then let's break it down here. There it is. Each one of these is a debit to account 24,000. It reduces payroll liabilities, amount of money we owe to the government for payroll. So each one of these line items is a debit to 24,000. And then the sum of this, which is also right here, it's a credit to account 10,200. Because it reduces it. And bank account is an asset and it is reduced when credited. Close. That's it, right? We processed our first payroll in March. We funded our payroll account, right? And we paid payroll tax liabilities. Done. That payroll is done. We have one more payroll in March that we gotta run. Go ahead and run it. Yeah, we have some time cards we gotta enter. Um, as I've mentioned, let's see, where's that boy? As I've mentioned, we've entered those time cards previously. We actually uploaded them to avoid time, to save time recording them. But I just want to show you. Here they are, right? And here's the next one. And, so on goes for the other employees. Right, we did it for Kelly, Reyes, Chisomo, and we have new employee. We have Kim Swarna, and that's going to be our receptionist. All right, we just added. So it's going to be 4 employees now. More fun. More and more fun. So here's Kim. They're not billable, but they will be impacting our payroll, but not our customer billing. So again, let's go ahead and get to it. Let's process this payroll. Pay period. Okay. See, we have 4. Continue. Right, here they are. Now we just have to enter all those individual details that we've done before. So let's get to it. Right, here it is. Which is almost details. Right, net pay matches. Next. That's our new person, Kim Swarner. Social security. Right, so here we added quite a few more line items. That's typical for the first couple of weeks of employment as maximums are met for certain type of payroll taxes. Okay, and then this. So all of these are increasing, right? Our payroll, payroll liability is 24,000. So these amounts right here, what are they doing? They're increasing it, right? And liabilities go up when credited. Here's another credit for 24,000. All right, that is good. Save it next. So, who's that? That's Labohang. We need to add a penny. Right now it's good. Let's enter the details. Federal withholding. And again, we covered debits and credits behind it in just previous payroll for this month, so we're not going to go into those instances here, but we'll cover the overall total. We'll cover the overall total. Let's see, that's Labohang. Alright, so that one is good. Again, this is a debit, right, to our payroll expense. This is a debit to our payroll expense. This is a credit to our bank account, and then the sum of this and this is a credit to our payroll liabilities because they went up. We haven't paid. All right, save it next. One more. All right, here it is. This one is for Kelly Race. Okay, resources, employer taxes. Okay. All right, net matches, good. Save and close. Here they are. Here's our debits and credits, right? Um, let's see. What's being debited, what's being credited on this specific payroll instance? Well, let's start with obvious bank account. What's the impact on bank account? So the only thing based on this that we expect to impact our bank account at this point are the checks, the net checks that will clear. So that's the net pay, right? 1491202. All right. What else? Well, we know that we owe some money for payroll tax and we withheld some money from our employees for payroll tax, but we haven't paid it. So our liability goes up. Our payroll tax liability goes up. Liabilities go up when credited, and it has two parts. 7,992.60. That's the amount of money we took from the employees. They're not our money. We got to give it back to the government. So it's a liability, and then the employer taxes. On the other hand, what do we have? We have payroll expenses, right? So it has two parts. One is the gross pay, right here. And the other one is the payroll taxes, because again, this amount is included in here. So the only addition is the employer payroll taxes. Voila, and we're in balance. Debits and credits are in balance, and that's the debits and credits behind this payroll. Okay, we showed it in individual checks, we showed it at the aggregate, and we'll continue to show it to you On some of the future months as we continue with the simulation. Not much difference. Do we have 2 employees, 3 employees, 4 employees? You'll see we'll have 6 employees soon. Very much similar. Okay, let's continue. Let's print those checks. All 4 of them again. Good to go. First check is 13, although we will have to probably renumber them. Okay. Alright, the checks printed correctly except for the numbering, but we're not gonna reprint them because of that. What we'll do is I'll show you my trick. We'll just go to that date. Alright, and here are our payrolls, right? So Chisomo had check number 15. Save and close, yes. Skip number, we'll fix it in a second. Okay, and then we had Kim. Kim had check number 16. Okay, and then we had Libohang, who had check number 13. And then we have Reyes, Kelly Reyes, Reyes Kelly. Reyes Kelly is 14. Alright, we have our checks numbers fixed. Again, custom transaction detail report. I love it because it shows you debits and credits of what we just booked. It's associations, and you see all those payroll liabilities impacts, the bank account, all those wonderful things are here if you want to investigate it further. Alright, so we booked the payroll. Now, just like before, what do we have to do? We have to fund it, right? Because the checks will be cleared. The employees will come and deposit those checks and they will clear. We want them to clear. And we have to pay those payroll taxes. Okay. We're going to take money from our general account to put it into our payroll account. That's it right there. All right. So debits and credits. All right. We're taking money out of this account. This account is an asset. Assets are reduced when credited. We're putting it into this account. So payroll account goes up, general account goes down. They're both assets. Therefore, for an asset to go up, we have to debit it. For an asset to go down, we have to credit it. So here it is. And then we have some liabilities we now have to pay, payroll liabilities. Again, what I do is I pick just that date for the reasons I just explained. Because the only date that matters is the date we did. Okay. Yep. We're paying state. Here it is. And what's happening? Our bank account, our payroll account, bank account will be reduced by this amount. Therefore, it has to be credited. Q1, 6708. So this amount right here is a credit to account 10,200. What else is happening? Well, we'll be paying down our payroll liabilities, 24,000. All of them going to 24,000. I'm just gonna break it down to show you. There it is. Debits and credits are in balance. Each one of these line items is a debit to account 24,000. 24,000 is a liability. Liabilities go down when they're debited. And that's what we're doing. We're paying down our payroll tax liability. This amount right here is a credit to account 10,200. Why? Because it's an asset. Bank account is an asset, and assets are reduced when credit. It makes sense that money will be taken out of our bank account, and therefore the bank account balance will be reduced. Okay, save and close. All right. More payment for federal. Let's do that. Okay. $7,912.36. Yep, matches. Make sure we correct everything. All right. Let's do that. Here it is, right? Bank account will be reduced, $7,912.36. And then each one of those amounts correspondingly will reduce the amount of money we owe for that payroll to the government. There it is. Debits and credits are in balance, right? Each one of these is a debit to account 24,000, and then this is a credit to account 10,200. Why? Because 10,200 is an asset. Assets are reduced when credited, and then 24,000 account, again, even though they're not shown here, it's a liability, right? Liability is reduced when debited. And that's what we're doing. We're reducing our payroll tax liability by paying it out of our bank account. Okay. Let's do just this one thing. And close, yes. All right, we're done with our payroll for March.